Life insurance firm Momentum Metropolitan's interim profits increased for the period as death claims returned to levels last seen in 2019 before the COVID-19 pandemic surfaced. Despite its pleasing set of results, CEO Hillie Meyer noted that new business volumes in some of the company's units performed below expectations, which translated to lower than expected new clients. For more, we are joined by the Momentum CEO Hillie Meyer. Hillie, thank you so much for your time. And as I've mentioned in my intro, interim dividend up 43%, and that's on the back of higher operating profits. Although you are seeing falling new business volumes, let's paint some color or picture for our viewers in terms of the interim period that was for Momentum Metropolitan.
Hello, and thank you, Nastasia. Yeah, look, I think just to give a bit of context, the drop in earnings is really driven by a drop in investment business. In most of the other lines, they were relatively flat or maybe very small increases, but investment business, is down, and I think we noticed, for example, a lot less people are now taking money offshore, so that caused a drop, and also just people investing in some of our platform businesses, that's reduced. I think that's a market trend, and I think to some extent the pressure on premiums is just a function of the economic pressure that all consumers, all our clients feel, clients and employers, because remember, employment's under pressure. There's not really any meaningful increase in employment rates, so less people work, and therefore less people invest in pensions. Less people have the money to invest.
When it comes to Momentum Metropolitan Africa, you mentioned this in your results presentation, that it was not in line with the objectives, especially when it comes to the sales side. What is this a function of, and what is within your control in that aspect?
One of the big differences between this year and last year was last year our sales numbers were boosted by a few big corporate transactions where companies invested, big lump sums. There was no such big deals this year, so that caused a drop. And then just generally speaking, I think similar to here in South Africa, globally, markets are under pressure. I think there's less disposable income. So for the rest, it's the same story as here.
When it comes to the financial planning side, growth appearing a little bit difficult on that side, does that mean that you have to revisit some of your plans that you have for that side of the business? And what shifts are you seeing, I suppose?
Look, I think the two things we really focus on is, we actually doing very, very well at ensuring that we make technology work harder for us. There's a lot of efficiencies and improvements that one can do. So there's a whole number of big IT projects, and we're beginning to see the benefit of that. And I think the second important factor is in terms of our own planning, in strategizing how we're going to tackle the next year or two. We're not relying on any meaningful growth in premium income. So we just, I think that basically means you've got to be very competitive. We've got to be, make sure that we have the right products and that we market those products properly. And in that sense, I think we're encouraged by, increases in market share that we've experienced over the last number of years. So we're well positioned, but the competition is going to get tougher.
And I'm glad you brought up the issue of the competition being a little bit tougher. What does that mean for, I suppose, clients, especially when you're dealing with customers and clients that are under financial pressure? We're seeing that with higher interest rates, higher levels of inflation. What does that mean for you from a pricing perspective?
Look, also, because the economy is not growing, there's very little maneuverability as far as price is concerned. And we know, for example, in the short-term market, all the companies had to increase their premiums significantly. So I'm not sure that the competition in this, in this cycle will really lead to keener pricing. It might happen to some extent with group scheme business, because, where business is done in bulk, there's a bit more negotiating power. But I think there's enough pressure on businesses generally, not to allow companies to give away margin, unfortunately.
With that pressure, and obviously that is a result of the external headwinds that we're dealing with, I suppose, in South Africa or globally, what's your outlook then for the next 6 months? What are you and the team working on?
We don't see the market improving. I mean, none of our problems are going to disappear. The challenges around, load shedding, crime, roads. We just need to focus on what we can control, and that's at the micro level. So we almost like move more into micro, focus at sort of at the micro level, do whatever we can. And it's more of a relative game. I think we've just got to do better than the competitors. I would say, if the market doesn't grow, then, I'm not sure there's room for all the competitors in the financial services industry.
Hillie, let's leave it there. I would have really loved to unpack that answer, but however, we'll leave it for the next time we have a discussion with you. Hillie, thank you so much for your time. That is Hillie Meyer, who is the CEO of Momentum Metropolitan, taking us through the company's financial earnings. We're going to take a break. When we come back, we'll have more news for you.